What's up everyone? Welcome back to the channel. Steve-O here with Treasure Your Flow. If it's your first time here to this channel deals with wealth building, personal growth, and lifestyle. On this channel, we aim to build a community around financial education. In this video, I'm going to share with you 5 tips that will get you on your way to investing in the stock market. Before we jump into the video, I'd like to ask you for a huge favor. Please take a moment to hit the like, subscribe, and hit the bell notification. This helps the YouTube algorithm and helps my videos reach more people. Appreciate it. Now, tip number 1, understand your risk tolerance. This is important because you need to understand what type of investor you are. Are you risk averse, which means you don't like to take a lot of risk, or are you a riskier investor? The rule of thumb is the greater the risk, the greater the reward. This also helps dictate what type of stocks and funds you will invest in. Now, tip number 2, understand your time horizon. This simply means how long do you plan to invest? Do you plan to invest for less than a year, which is the short term? Or do you plan to invest for the long term? Me personally, I'm a long-term investor. I plan on holding all my investments for a minimum of 5 to 7 years. By being a long-term investor, this allows me to not have to worry about the daily fluctuations in the market and stay the course for the long term, because over the long term, the markets tend to go up. Now, I have to make this disclaimer. I am not a financial advisor. You're responsible for doing your own research. I'm simply sharing some of the things I've done with my own personal finances. Now we get to tip number 3. Tip number 3 is selecting your brokerage account. And I know you're asking, what's a brokerage account? A brokerage account is a trading account which can easily be opened online or through an app that allows you to fund money into this account and begin trading stocks. So this is the good part. Some of the things you may want to think about when selecting a brokerage account is, do you want something that's more of an app like Webull or Robinhood, or do you want more of a robust trading platform like E-Trade or TD Ameritrade? Now, opening an online account is extremely easy. I was able to apply for and get approved for a Webull account in under 20 minutes. Now, I'm going to walk you through some key steps of opening an account. Also, during the time that I opened my account, Webull gave me 4 free stocks by funding my account with at least $100. So you may want to take advantage of this promotion if it's still going on. I'll leave the link below. Now I'm going to walk you through opening a Webull account through your app. It's very simple. Go to the App Store, select Webull, go to your individual account, and then make sure you sign up via mobile. That's probably the easiest way to do it. And then click the open the account button. And then here they're going to ask you, what kind of identification do you want to provide? I did driver's license. I think that's probably the easiest one. Now on the next screen, they want to ask you what type of account do you want to open. For you all, if you're a beginner, you should probably just select a cash account. But since it's the first time that I'm opening a Webull, I'm going to do anything that I think I might use in the future, which is a margin account, stocks and ETFs, definitely. And then crypto if you plan to trade crypto in the future. But for you guys, definitely the stocks and the ETFs. And then they'll ask for your signature, get you verified, and you'll be on your way. Next, you want to fund your account. And once you fund your account, I recommend doing at least $100 because they give you 4 free stock. And you could see here, they've given me 2 stocks of Zynga. I'm familiar with that ticker symbol, and I don't know what SWN is, but I got 2 stocks of that. And then now you can see my account has been funded. I put $500 in the account, and then now I'm going to execute a few trades just to show you guys the process. And then there are a few key things that you guys really want to keep in mind when you get to the point of placing a trade. The items you want to think about is how many shares of a specific stock do you want to buy? What stock do you want to buy? And then are you buying or are you selling? For you guys, it would be buying. And then there are two types of orders that you can place. And I'll get into that, which is very important. The first order is a market order, and the second order is a limit order. As I go through, I'm going to show you guys the two different types of orders and explain the differences. Now in this section, I'm going to show you how to place a trade, and you don't have to worry about what stock or fund that you need to buy. I'll cover that for you in the next section. So you want to click quick trade, and then it'll bring up this screen. Now in this specific screen, this is where you can find what stock you want to invest in. For example, if you want a Facebook, you would type in Facebook and then the ticker symbol would pop up. But since you're a beginning investor, I highly recommend an index fund. So I know exactly which index fund that I want to purchase. So I'm going to put the ticker symbol in here and you could see the specific index fund. So VOO is the Vanguard S&P 500 index fund. So I'm just going to select that and show you what the process would be to buy that. Now let's place our trade. We know we got the ticker symbol VOO, which is the Vanguard S&P 500 index fund. And we know that we want to buy, which is that big green button. The next thing we want to know is what type of an order do we want to place? There are two types of orders we should be starting out as beginning investors that we should be using. So it's either a limit order or a market order. For this one, we're going to do a limit order. And what a limit order is, it allows us to pick a specific price that we want to buy the stock at. So we can see that the stock is currently trading around $336. But if we wanted to buy it for $300, we would just set the limit price to $300 and be patient and wait to see if it hits $300 in order for us to purchase this stock. Now, if the stock never hits $300, we will never be able to get that order executed. So a limit order is mainly for trading at a specific price. And then now you want to select your quantity, which is we want to buy 1 share. And then the next is something that automatically defaults to day, where it says time in force. And the other one is GTC, which means good till cancel. So if you place this type of trade, the order will remain open in perpetuity until the order is either executed, meaning that we get the stock at $300, or we come back in and we cancel it. But normally I just do my trades just for the day. Now all you have to do is hit the buy button. Now it's just telling you that there's a large difference between the market price of $336 and the limit order that I want to buy it at $300. So just hit continue. And it's going to give you an opportunity to review your specific trade. It's telling me that I'm buying VOO, the S&P 500 index fund, 1 share for $300 at that limit price, and it's going to cost me $300. Once you review that, you simply hit confirm. Now it moves it to pending status. If it never drops to $300, then you'll never be able to purchase that price. And we're going to buy AT&T because that's a company that I've researched and I feel comfortable with. So I just go into the bar and the search bar and put T because that's the ticker symbol. And then where it says limit, we're going to switch that to market order, which means we're going to place the order in the market. And the biggest difference between a limit and a market order is that a limit order, you get to set the price. The market order is whatever the stock is selling for at the time, that's the price you're going to get it at. And currently AT&T is trading for around $31. I want to buy 6 shares of AT&T at around $30. So it should be roughly around $186. And then we're going to do it for the day, like I mentioned before. And then we're just going to hit the submit button. It gives you your order confirmation. It says that you are buying AT&T 6 shares at market price. And then hit the confirmation button. And then I'm good to go. And also now, when you go into your positions, it's going to show you that you automatically, or not automatically, you instantaneously own the shares. So that's 6 shares of AT&T for $186. Now that you've opened your account, tip number 4, selecting your stock or your fund. I highly recommend you spend some time doing some research, but there are 2 easy ways to get started. The first is to invest in an index fund. I know you may be wondering, what is an index fund? An index fund is a portfolio of stocks that's put together to mimic the performance of the stock markets. The most common index fund is the S&P 500. This index fund contains the top 500 companies in the stock market. So it holds companies such as Apple, Amazon, Google, and Facebook. This is a good way to diversify your portfolio and get into the stock market as a beginner. Now, the second strategy is to invest in what you know. This strategy was made famous by legendary fund investor Peter Lynch. By nature, we all have exposure to products and certain experiences based on where we work. By using this strategy, you can have an advantage by looking at trends. For example, I'm a real estate agent, and I've noticed over the past year that all of the realtors were using Zillow, and I manage a couple properties, and I also use Zillow. So I noticed this trend and invested in Zillow about 6 months ago, and I was able to earn a decent return because I paid attention to these trends. So for you, make sure that you pay attention to things that are going on around you, and these are some of the products that you can invest in. Now, tip number 5, check your emotions at the door. Investing your own money could probably be one of the most emotional decisions that you make. This is an area where I see a lot of new investors making a lot of mistakes, and that could cost you. Warren Buffett, one of the most famous investors, said, "The stock market is a device for transferring wealth from the impatient to the patient." So when you're investing, it's very important to know why you own a stock and invest with conviction. This will allow you to stay the course during volatile times and allow you to earn a better return over the long run. Now, to summarize the 5 tips to getting you started at investing in the stock market. Now, tip number 1, understand your risk tolerance. This is important because you need to understand what type of investor you are. Are you risk averse, which means you don't like to take a lot of risk? Or are you a riskier investor? The rule of thumb is the greater the risk, the greater the reward. This also helps dictate what type of stocks and funds you will invest in. Now, tip number 2, understand your time horizon. This simply means how long do you plan to invest? Do you plan to invest for less than a year, which is the short term? Or do you plan to invest for the long term? Me personally, I'm a long-term investor. I plan on holding all my investments for a minimum of 5 to 7 years. By being a long-term investor, this allows me to not have to worry about the daily fluctuations in the market and stay the course for the long term, because over the long term, the markets tend to go up. Now, tip number 3, selecting a brokerage account. This is really a personal choice or personal preference. Whether you want to go with a TD Ameritrade or an E-Trade, which is a more robust online platform, or one of the more popular applications like Webull or Robinhood. There's no wrong way to go, but just do your research, pick one, and get started. Now, tip number 4, selecting a stock or fund. I mentioned there were 2 easy ways to get started. If you're a less risky investor, you may want to lean towards getting an S&P 500 index fund, or if you want to take your chances at picking stocks yourself, you may want to apply investing in things that you know and identify some of the trends around you that you can invest in that'll make you successful. Now, tip number 5, don't get emotional when it comes to investing. This is easier said than done because when it comes to investing your money, nobody wants to ever lose money or see their money going down. But just remember, you have to be patient, diligent, and disciplined to stay the course. And as long as you do that, you will have some success.